we have an interesting house. It's an REO. Now, an REO, what that means, it's real estate owned by a bank or whoever took back the property because the sellers or the people that lived there defaulted on the loan. And so this REO still has the tenants in place and they're paying rent. So that has now given the bank a tenancy situation. And so in Southern California, we have a lot of areas that have rent control situation, and you need to find out if you have to deal with rent control issues with these tenants. But the tricky part here is that the seller, which is the bank, and through these agents, is not allowing entry. But you'll want to drive by, taking a look at what the house looks like. Deferred maintenance is basically what you're looking for. Have they completely stopped taking care of the property? And if they did, how long ago? How bad does it look? And how much are you going to have to remedy and repair? What makes this property interesting is that it's a very low-priced property. The purchase price is in the 400s, which here in Southern California is very low. You really can't find good properties in decent areas where you can buy a house for $400,000 in the 400,000. So this house is in the 400,000s, and the main thing, it's got a big lot, and so you can build what's called an ADU, or an accessory dwelling unit, which is basically making a unit out of a guest house, okay, or building a guest house and being able to rent that out separately. State of California, the city of Los Angeles especially, is missing a lot of low-income housing. One thing the government did was allow for ADUs to be built, accessory dwelling units, that allow someone to build a unit out of their garage or out of a guest house and be able to rent that out to provide housing for lower incomes. Now, what that does in Southern California especially is it provides a wonderful situation to offset someone's mortgage. If you want to live in the house, in the main house, and then provide yourself some rental income to pay down part of your monthly payment, or if you're using it as a rental, just for pure rental income, you can purchase this house in the 400s, build an ADU, and renovate the main house for $200,000-ish to $50,000, depends on the condition of the main house, of course, right? And let's say you're all in for $8,000. Between the front house and the back house, at least the one we're looking at right now, you'll get about $6,000 in income. So $6,000 in income, you're all in for about $800,000, of which a lot of it can be leveraged, it can be financed to get back bank financing. You're getting about 0.8% per month in rental income, which is fantastic. At least for Southern California, it's fantastic. If you go out into the Midwest and the Southeast, you're getting higher rental rates. And so, for example, if you get 1% per month, it's basically you're getting a 12% return on your money, not including the potential appreciation of the property. It's a great investment, especially when you're leveraged, meaning you have financing behind it, so you have low cash out of pocket, and you're also paying down the mortgage over time.